This video is about Sony's fiscal year 2024 third quarter financial results, period from April 2024 to December 2024. Sony is a Japanese multinational conglomerate that operates in various industries, including consumer electronics, gaming, entertainment, semiconductors, and financial services. It is best known for PlayStation gaming consoles and Bravia televisions. Quarter 3 fiscal year 2024. Consolidated results. Sony's consolidated sales, excluding the financial services segment, grew by 7% year-on-year to 3.7 trillion yen in the latest quarter, while operating income rose by 10% to 423 billion yen. Including the financial services segment, total consolidated sales increased by 18% year-on-year to 4.4 trillion yen. Operating income saw a modest 1% rise to 469.3 billion yen, marking a record high for the third quarter. Net income also grew by 3% to 373.7 billion yen. Cumulative net profit is 943.8 billion yen. Progress rate against the annual forecast of 1,080 billion yen is 87%. Sony achieved strong financial results this quarter as usual. FY2024 Consolidated Results Forecast. Including the financial services segment, Sony has revised its consolidated sales forecast up by 4% to 13.2 trillion yen. Operating income has been raised by 2% to 1,335 billion yen, while net income has been increased by 10% to 1,080 billion yen. With the upward revision of the forecast, this fiscal year is expected to be the highest profit ever. Sony is doing better than ever. Quarter 3, fiscal year 2024. Results by segment. Game and Network Services segment. Sales for the quarter increased 16% year-on-year to 1,682.3 billion yen, primarily due to increased sales of hardware and third-party software. Operating income increased 37% year-on-year to 118.1 billion yen, a record high for the third quarter in the segment, primarily due to the impact of higher revenue from network services and third-party software, as well as improved profitability of hardware. Music segment. Sales for the quarter increased 14% year-on-year to 481.7 billion yen, primarily due to higher streaming revenue and the impact of the consolidation of Eplus Inc. in visual media and platform. Operating income increased 28% year-on-year to 97.4 billion yen, mainly due to the impact of the increased sales. Pictures segment. Sales for the quarter increased 9% year-on-year to 398.2 billion yen, primarily due to higher revenue from theatrical releases and the impact of foreign exchange rates. Operating income decreased 18% year-on-year to 34 billion yen, primarily due to an increase in marketing costs for theatrical releases. Entertainment, Technology, and Services segment. Sales for the quarter decreased 4% year-on-year to 704.5 billion yen, primarily due to a decrease in unit sales of televisions, while operating income remained essentially flat at 77.1 billion yen. Imaging and Sensing Solutions segment. Sales for the quarter were essentially flat year-on-year at 500.9 billion yen, primarily due to a decrease in sales of mobile image sensors, offsetting the impact of foreign exchange rates. Despite the positive impact of foreign exchange rates, operating income decreased 2% year-on-year to 97.5 billion yen, primarily due to increased manufacturing costs and the impact of the decreased sales. Sony and Kadokawa collaboration. Sony has deepened its partnership with Kadokawa. While the two companies have previously collaborated, Sony became Kadokawa's largest shareholder after signing a capital and business alliance in December and acquiring newly issued shares in January. With this alliance, both companies are strengthening their commitment to collaboration. Sony aims to leverage Kadokawa's expertise in original IP, intellectual property creation, alongside its own technology and global expansion capabilities to generate new value and entertainment. Repurchase of shares. Sony announced a new share repurchase program of up to 30 million shares, which is about 0.5% of outstanding shares with a maximum budget of 50 billion yen. The buyback runs from February 14th to May 14th, 2025. This move reflects Sony's confidence in its financial health and commitment to shareholder value. Dividend amounts have been also increasing. Sony's shareholder return is good. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 3,813 yen as of February 21st, and the US dollar stock price is $24.78 as of February 21st. Current PBR is 2.81, and PER is 21.3. Dividend yield is 0.52%. Compared to the last few years, all PBR, PER, and dividend yield show that stock price is relatively higher. Sony's stock price is soaring due to expectations of future growth. As a result, stock prices are now relatively more expensive than before. Conclusion: Sony has been making steady progress toward achieving FY2024 forecasts. Game and Network Services segment and Imaging and Sensing Solutions segment, driving profit growth, have both been able to significantly increase profits since last fiscal year. Sony completed the repurchase of the maximum 250 billion yen of own shares and has established a new facility to repurchase a maximum of 50 billion yen with a deadline of May of this year. Both business performance and shareholder returns have been strong and good.